Good morning, gang. Thursday, here we go. And all that rain I was supposed to get overnight, nothing. Let's hope we get some rain today because I already reeled in everything I needed to pump water and because I didn't want to leave equipment outside in the rain. Well, hopefully it rains. So, all right. Not the point of the video. Uh, this is beyond worrisome, guys. And I want to get into some of this. Maybe y'all noticed yesterday, maybe you didn't, okay? The Dow was down 1,164 points yesterday. The NASDAQ was down 566, okay? The Dow down 3.5%, the NASDAQ almost 5 yesterday, okay? This morning, futures are down on the Dow as I'm recording this here at 5:15, 440 points. S&P futures down 58 points. Okay, NASDAQ obviously getting crushed as well. Doesn't look good anywhere. What's bringing this on? Well, some of the biggest retailers, i.e. Walmart and Target, have come out in the last couple of days and have just revised their outlooks downward, saying things like unusually high costs, difficulty in getting product to market, et cetera, et cetera, et cetera, is causing them to reduce profitability. And I know people go, well, big deal, the big companies aren't making any money. Well, I hate to tell you this, guys, but, the economy runs on service at this point. We don't make anything anymore. So the service economy is what we've turned into be, and retail would fall into that, what you can give to the people. This is where our economy is heading. Now, to give you an idea how bad these two got bludgeoned, Tuesday, Walmart shares dropped 11%, their biggest drop since 1987. Anybody remember what happened in 1987? Big crash in the market. Target shares yesterday down 25% in a day. Okay, that happens to penny stocks, not to major companies. Not that I'm a big fan of Target because they can't figure out which bathroom people are supposed to use, but okay, even then, still something in the economy. I'm going to give you this, okay? This should be telling as to where the economy's going. And I've been saying this for too long, okay? Year to date, since January 1st, the Dow is down 13%. That's correction territory. The S&P is down 18%. The NASDAQ is down 27%. Okay, now remember, not giving you guys financial advice, but I kind of said to expect a bad year. I said it last year too, and I was wrong. This year, I wasn't wrong. Let's put it this way, I wasn't wrong, I was early. I was wrong saying by December 31st, just had my dates off. So now everybody talks about where to go for an inflation hedge. Yeah, Bitcoin, year to date, since January 1st, down 24%. So much for Bitcoin being a inflation hedge. Gold, flat. Actually, gold is up. Teeny tiny. Gold is up $1 as I'm recording this, because obviously gold's trading right now, from its January 1st price of $18.20. If I look exactly, well, I guess I could. Let's see. Exactly right now, gold is $18.23, so it's actually up $3. Okay. No matter how you slice it, you are poorer than you were 5 months ago. Why? That 8% inflation would do something to you. Your dollar is worth less, okay? So there's been nowhere you could put your money. Not the stock market, not gold, not Bitcoin, nothing, that you are in better shape than you are this year. Now, for those 30% of the people that think the economy's doing great and good old, Joe is doing a good job, get your head out of your ass, okay? because the funny part was, after, when the new White House press secretary yesterday was asked about the stock market, her answer was, well, the White House doesn't follow the stock market that closely. No shit. You don't follow the economy that closely. You have no clue what's going on in the real world. Okay. The stock market's kind of important to the American public, whether or not we're invested in it. Okay. If you're invested in, a lot of people have their retirement in the stock market, be it a 401k, be it an IRA, whatever it would be. Okay. Whether you got it through your company, on your own, whatever it would be. But the stock market also, like I said, Walmart and Target, is an indicator of how the economy's doing. All right. Companies have to tell you, how their profits are looking, what's going on. Yesterday, I was talking about Biden and wanting to build 500,000 new homes, right? New home starts came out yesterday. Okay. Guess what? Less than the estimates. Okay. So the economists thought we were going to build more homes than we did in April. Okay. The house builders can't build 100 and some odd thousand houses, but Biden thinks we can build 500,000. Okay. Interest rates are going up. 30-year mortgage is at 5.6%, guys. Okay. We're getting close to double where it was at the beginning of Joe's presidency on mortgage. Okay. This is all starting to get reminiscent of 1970, and I talked about that a couple of months ago, what I was saying, 1973, 74, 75. What happened? You had rates going up, et cetera, and the Fed raising rates, and then all of a sudden the economy just completely tanked because of it, and then the Fed had to start cutting rates, and we were in a stagflationary environment. Okay, 1973, 74, 75. Remember me talking about this. This is mirroring it. Now, you get into what else is going on. You have plenty of investment banks, whatever. I mean, Jamie Dimon, pick one. I mean, Goldman Sachs, Bank of America, Chase, everybody is, well, JP Morgan Chase, is everybody saying a recession is here. We had contraction in the first quarter, guys. If we have contraction in the second quarter, which we're now halfway through, looking pretty good, we will officially be in a recession. A recession is 2 consecutive quarters of negative GDP. We're at negative 1.4 for the first quarter, so just give you an idea. And if you think your life has gotten better since the end of March, please tell me how you're doing it. Okay. So let's go into some of the most respected analysts in the country, in the world, whatever. Jeremy Grantham, okay? Jeremy Grantham owns a investment banking firm, okay? Hedge funds, mutual funds, et cetera, et cetera, et cetera. One of the smartest guys on Wall Street, no big deal. He is saying we are going into a recession that is worse than what we saw in 2000. Okay. Let's remember what happened, and then added 9/11 on top of it. And I'm going to get to that point in a second. Okay. You had a recession spin. You had a bubble. Remember back then we had the .com bubble in the stock market. Then 9/11 happened, and this was what put me out of the investment industry. Okay, 3 years of down in the market, and the public was paralyzed. What's Grantham calling for? The S&P to drop 40% from here. Okay. What does 40% look like from here? Well, again, if we go back to it, the S&P right now is 3,900. So let's take off, what is that, 78 and another 11.7. Okay. So he's saying down to 2,200 on the S&P. Okay, 40% down from here. Remember I told you the S&P was already down this year, 18%. Okay, so that's pushing a 60% drop in the S&P, giving you that. So let's take a look at probably one of the most respected analysts anywhere. Okay, Charles Nenner. I'm guessing this is a name you might have heard of Jeremy Grantham. I'm doubting you've heard of Charles Nenner. Okay. To give you an idea who this guy is, all right, CNBC calls him the Oracle of Cycles. All right. The Financial Post calls him one of the top research minds. What was it? Forbes magazine. He's a legendary analyst. Okay. The guy is well respected. I've paid attention to him for a long time. I mean, he was on the board of Goldman Sachs for the longest time. Guy knows what he's doing. I mean, he owns his own firm at this point. Okay. And he watches market cycles. Not only market cycles, but geopolitical cycles. And this is where I go into 9/11. What he is coming, and I'll link this below so you can watch this whole interview. But what he is talking about is we will be in a massive World War III by next year. Okay, and the cycle. I mean, and he's good at figuring this stuff out. Death toll amongst the world: 1/3 of the population, 2.5, 3 billion people. 1 out of 3 dead. Okay. Again, I'm going to use this same thing. I used it before with food. 1 out of 10 people. Look at your neighbor's house on both sides, and your house, chances are one of them doesn't have enough to eat. Now look at your neighbor's house on both sides of the house. One of those 3 houses, your neighbor on the left, your neighbor on the right, or you, is going to be dead next year. Okay? And I know people go, oh, fear porn, scare tactics, everything like that. Yeah, you're wrong. Okay? Maybe this guy's wrong. What if he's right? Are you prepared to be wrong yourself and he's right? Nenner also called the market. Okay? Again, Wall Street. He's calling for Dow 15,000. Mind you, that's more than a 50% cut from where we are, and actually below where I said it would be a 16, okay, as he put it, on its way down to 5,000. I remember Dow 5,000. Dow 5,000 was when I started in the brokerage industry, 1996. Okay, and I remember watching 5, 6, 7, 8, 9, 10. I mean, you should have seen when we hit 10, the euphoria in the offices with the brokers. Okay. So what else does Nenner say? Oil going to $150 a barrel. Okay, so figure 50% increase here. You don't like $4 a gallon of gas? Try 6. Okay, minimum. He's calling for gold to be $2,500 an ounce. Okay, we're at 1,800 right now. So let's see, we're going to have the market drop 50+%, and we're going to have gold go up 50+%. Okay, there's a rough decision to make. Interesting quote. And I'm just going to say, Nenner says if the world goes back on a gold standard, which Russia seems to be wanting to do, gold will hit $40,000 an ounce. Think about that. Okay, it's 1,800 right now. Let's say you want to spend $250,000 on a house. I know, lots of money, right? What if somebody came up and said to you right now, okay, if you had $10,000, I'd sell you my house. You'd be like, I'll rob the bank to get the money, okay? Literally, if he's right, okay, you had $10,000 worth of gold today. If he's right, that's about $250,000 going forward. Now, how inflation eats it, everything, et cetera, et cetera. We'll see a housing market crash. Chances are very good, okay? This is what the pros are talking about. Travis over at Prepared Homestead did a video yesterday afternoon on some of the other banks and everything talking about what's going on. We get it that the American people, let alone preppers, get it that the American economy is in the toilet. The world economy is in the toilet. The banks, the brokerages, they all get it. The only one who doesn't seem to get it is Washington, D.C. And the only one who really has any significant power to do anything about it is the one that's going, okay. Guys, this is serious stuff. I'm not telling you to go out and buy gold today or whatever. What I'm telling you to do is, not that I'm going to tell you not to either. If there's anywhere I'm putting my money right now, extra money, that's where it is. But what I am saying to do is the same thing I've been saying for a long freaking time. Tangible goods. If you've got the extra money to go buy an extra can of Beanie Weenies, buy it. An extra can of Spam, buy it. If you've got a little extra to buy on that, okay, go get a new pair of tennis shoes, go get some more clothes, whatever it would be. If you've got the food taken care of, go somewhere there's something that's going to keep you warm. Fill up the propane tank, fill up the heating oil tank, whatever it would be. Those would be places I'd want to put money. Some sort of power generation. If you can afford to buy a generator of some sort, whatever works for you, whether it's gas, whether it's dual fuel, whether it's solar, whatever it would be, figure that one out, okay? Make sure your water situation is taken care of. If it means go out and buying hand well, do it. If it means getting 20 more cases of water and putting them, in a bedroom, do it, okay? Anything you can. Get those tangible items now because they are not getting cheaper and they are going to get more scarce. And your money is slowly, it's a snowball, okay? The snowball's this big right now. But in January, the snowball was this big. And it's rolling downhill and it's picking up speed. Your money is quickly getting worth less and less and less and less and less. Or you have less and less and less and less of it. Think about it, guys. If you had $100,000 in your retirement account at the beginning of the year, just invested in the Dow, the S&P, and the NASDAQ, okay, just in index funds, you probably have 80 grand left. Now take out what inflation did to that, okay, the 8%, and now you have the equivalent of about 73.6. So you have less than 3/4 of what you had last year. Spending power. Prices are going this way, your money's going this way, and the economy's doing this. This is the 1970s all over. Joe Biden makes Jimmy Carter look like a freaking genius. Remember what it took for us to get out of Jimmy Carter. Ronald Reagan, who everybody, the consensus of people with 2 brain cells, one of the greatest presidents we ever had. Who's coming back? I don't care about personality. I care about performance. We need to go back to one of the other greatest presidents we ever had and get this freaking clown show out of D.C. as fast as possible before they destroy the country. November can't come fast enough. And I know what you're all going to say. We're not going to have elections, but whatever. Okay. November can't come fast enough. We need to handcuff this administration somehow because they're trying to ram through every stupid thing they can do to destroy this country. Yes, it's planned. The Democrats are trying to destroy it. Okay. Like I said, Joe doesn't pay attention to the stock market. Well, of course he doesn't. Joe's got income coming in from all over the place. 10% here, 10% there, 10% here. I don't have that. Do you? My kid isn't cutting billion-dollar deals under the table and giving me 10%. I have to watch what goes on in the stock market. You should too. Pinball out.